because up next we're about to finally get started with the fireside chat on the role of technology in shaping the future of global finance. And we've got two amazing leaders, two amazing speakers who are joining us. First up, we have the august presence of none other than Mr. David Finch, Global Managing Director, Fintech, TransUnion CIBIL. Can we have a louder round of applause, ladies and gentlemen? None other than Mr. David Finch, right here at the Global Fintech Fest. Thank you so much, sir, for joining us. And may I also please invite on stage Mr. Sopnendu Mohanty, Chief Fintech Officer, Monetary Authority of Singapore. We're talking about shaping the future of global finance. And let's really quickly deep dive into this much-awaited discussion. With that, let me quickly hand over the stage. Over to you, gentlemen.
Very good. Yes, we can be heard. So good afternoon, everybody. Pleasure to be here today. And clearly, we're making way for the Prime Minister for tomorrow. So hopefully, we can get through this without any more glitches. But if I could just introduce Mr. Mohanty, who's the Chief Fintech Officer for the Monetary Authority for Singapore. A well-known figure in the global world of fintech, and a pleasure to have you here today. So we're going to kick off with a number of questions for Mr. Mohanty, and then towards the end we'll try and leave a few minutes for some Q&A from the broader audience. But let me kick off with generative artificial intelligence, Gen AI, easier for me to say. So Mr. Mohanty, we see multiple use cases for Gen AI globally in FS, in fintech. Many organizations started using it for back office productivity, efficiency gains, also front of house, sort of more customer interaction. But as this develops into the fintech world, how do you see the progression for Gen AI when you think about the end consumer? Maybe more targeted offering, looking at potential granular levels of potential fraud. So how should we be thinking about this in your perspective within the FS and the fintech world?
Thanks, David. And I suspect your question is more around from a regulatory perspective.
Correct.
I think from a policy standpoint, Singapore has been looking at AI almost on a 6th year, 7th year. And this is before Gen AI. And then the interest from policy standpoint was to understand responsible AI, which I think the theme of this festival, responsible AI. And when we started thinking about the responsible AI, keeping in mind the consumer challenges it may have, we started putting a program then called Veritas. And the reason we put that program, because just before that, I'm talking 2019 or 18, we came with the principle as a regulator that if banks are implementing AI, they got to focus on 4 risks: fairness, ethics, accountability, and transparency. So FEAT principles. And as it turns out to be that when we put the principles out there, the banks asked us the question, it's good you put the principles, how are you going to check it? And we didn't have a good answer to that. And what we did is we started a program called Veritas, where we worked with the bank, and we put an open source code to see whether collectively we can deploy code which will allow the banks to figure out that when they're deploying algorithms and the logic, they can check for fairness, ethics, accountability, and transparency. And that program went fine. We went to multiple use cases, from fraud, from marketing campaigns, and everything was going great. Then came Gen AI. And that changed the risk profile. And instead of 4 risks, we have added now 7 risks, from IP issues, data issues, privacy, and all this thing. And we created a program called MindForge, and we're looking at what is the multiple dimensional impact this Gen AI has now from a consumer protection perspective, from a accountability perspective. Now, I go back to a foundational principle thinking. Do you want to regulate the knife or the outcome of the knife? Because I can give the knife to a chef, they do a great job. I can give a knife to somebody else, they can do a bad job. So we should think of not regulating the tool, but regulating the outcome, and the responsibility of the person holding the knife to be regulated so that they don't create wrong outcome. But with Gen AI, things have changed. The knife is not a normal knife. It's also an intelligent knife. You may intend not it to do certain thing, it will do beyond your control. So this has made regulators' life more complicated because you're trying to figure out how do we ensure the people who are deploying this Gen AI have some sense of governance and control on the things they don't control. And that's still a work in progress. We have put together a set of framework how to deploy this Gen AI. And I can tell you one of the CIO of a very reputed aggressive bank told me that they don't want to deploy Gen AI because they're so worried about the liability issues with that Gen AI. So in the banks, there's a lot of fear that by deploying that, you may end up some wrong regulatory outcome. And then comes the EU AI Act, which has now figured out there are 4 dimensions: risk-based, they have prohibited, you can't use AI for privacy use case like IDs. So they have put some framework, but I think it's still a work in progress. I think one of the responsibility as a regulator we just can't leave it to principles. We got to work with tech companies and work through a framework by which we can measure the outcome and also give a supervisor where to check for it.
I mean, the pace of which it's evolving and working collaboratively with the marketplace is clearly helping.
Yes.
The understanding as this progresses at the pace that it's running at, but the guide rails, as they evolve, need to be very explicitly clear.
Yes, and there is always going to be this challenge of there'll be unknown.
Yeah.
There'll be unknown unknowns going in that space. But again, we have to think what we are regulating is not the tool. Tool inherently doesn't have that bad or good outcome.
Understood. Thank you very much. If I pivot away from Gen AI into sort of open banking, open finance, open data. So globally, that's progressing in multiple different regions. If I think about the UK, if I think about Brazil, there's over 100 million users in Brazil accessing open banking capabilities. It's emerging in India now. If you were to guide or give some guiding principles, I don't know, the top 2 or 3 areas of when done, focus areas that from a regulatory perspective, when done right, this really does empower the opportunity that sits around open banking, open data, open finance.
Well, I think the biggest curse of open banking is the word open. I think that has caused more problem than the virtues of open banking. Well, there's a model in the UK, there's a model in Europe. The Singapore Asian model for open banking is slightly different. The way we have approached open banking is to build in 3 layers the open architecture. First, the banks themselves have to have the right architecture so they can integrate their services with third-party fintechs. The traditional banks don't have an open architecture to even plug in services which is useful to them. So we have spent a lot of time thinking about open architecture within the constraint of the bank's own governance structure. That's one layer. The second layer, I think, is from the spirit of open banking, is how to ensure that customer can interoperably move the data between different institutions. And the approach we have taken is through a process of what we call as equivalency, which means that if I am an institution which is providing a consumer data based on the consent to an open architecture, I expect the recipient institution also to contribute. It cannot be that Facebook takes the data, but Facebook doesn't give the data. As an example, I'm not calling out Facebook, but as just a sake of example. So we have created something called SG Findex, which is a consortium of participant institutions which have on a consent architecture where a consumer can consolidate the data from the past participating institutions so that they can do value-added services on top of that. And the third layer is where we are looking to the next stage. And this includes all asset class of financial services, whether it is insurance or stock exchanges, everything. The third layer on open banking is open finance. I think that needs some more thinking around to make it fair and easier, because still there are a lot of operational challenges because the data set behind open finance may not reside within the same institution. And a lot of data needs to be validated, verified, so there is still an ongoing work in that. But collectively, I would say that open banking, open finance, by design, thanks to public infrastructure, has taken some roots in the Asian market. But because of this governance challenges, unlike Europe, UK, it has not taken that same outcome. But I think in the balance, there is a fundamental, deep structural shift which open banking has got to the Asian market.
Yeah, thank you for that. And I think from the European model, it's very much a mandated by the governments, by the regulators. And it's really a co-created environment where there is the reciprocity of sharing data, but the pivot or the fulcrum is all around the consumer consent, and it's time-bound. So I think where we've seen that, to your point, setting those boundaries, setting those guidelines, understanding the reciprocity piece, pivoting around the customer consent, I think that's where we're seeing adoption accelerate.
Yes, I think reciprocity is the key part, and that's what Asia has started with. The starting position is that we should able to reciprocate the data exchange between two parties. It cannot be disproportionately skewed to one party.
It's going to be interesting globally as I travel around the world and speak to Canada, South Africa, Colombia, India, in terms of the progressive mindsets. But I think there's still some evolution of thinking and alignment between regulator, government, and the financial services world, really, to just align on actually how they're going to really operate that.
And just a quick on that, we also started a concept called Universal Trusted Credential, which is taking data not necessarily held by the government or by a private consortium, but we can do a bilateral, open, decentralized tokenization of credential data. And that's just a new way of thinking. There's a report out there which MAS has published in partnership with UNDP called UTC, Universal Trusted Credential. Good for audience to take a look at it.
Very good, thank you for that. Pivoting now to digital public infrastructure, DPI in India, we have UPI. Colombia also has its own environment. It's creating guide rails, technology, a level of regulation, a level of accessibility for fintechs to deploy their services into a particular region. If you think about DPIs, maybe from a global context and or a Singapore context, how do you think that open technology will play in the future from a global, and I'd also be interested in a Singapore view?
Well, the best example of DPI is right here. There's nothing can be better than what India has done in DPI. We look at DPI in 4 layers. There's an identity layer, there's a money exchange layer, data layer, and a consent layer. And same thing has happened in Singapore, in Thailand, Indonesia, in some sense. What we are now up to is to create it interoperable across the border. And to do that, as an example, Singapore connected UPI to our equivalent in Singapore called Pay Now. We also connected with Indonesia, so with Thailand, PromptPay. We connected with Malaysia. Now, just to give you a little context here, it took us 3 years to connect almost identical DPI stack in Singapore and Thailand. It took 3 years. India, I think it took us 1.5 years. And you'll wonder why the DPIs, which are identical construct, design, technology, has this challenge. And it's all lack of integration and policies. Many a times you believe this has standards, but when you actually connect, these are not standards. There are a whole set of work DPI has to do to make it operating in an interoperable way across the border. This one. And the second is there's whole pricing challenges. In a country, you can subsidize the DPI cost through a public utility. When you connect to cross-border, the economics doesn't work anymore. You cannot just subsidize between two countries because that's a very complicated bilateral agreement. So lack of subsidizing the real cost of DPI becomes a pricing challenge when it goes across the border. So as an outcome, we created a project called Project Nexus in partnership with BIS. And that is now looking at, as an example, how to connect different payment systems across countries who have similar standard so money can move cross-border. So my large point is that I think DPI as a subject is has well debated in this country, you don't need to add more. What we need to think about, are these DPI globally interoperable? The answer is we are not ready. There are a whole set of very difficult choices to be made, from pricing to standards through liability shift, especially dispute resolutions, and this has a long way to go.
Thank you for that. Would you, when you think of the complexities of integrating two countries, is it equal levels of complexity of technology, definitions, regulations?
This is a whole set of, you don't know what to do. It's a huge set of differences. Culture is also becomes a difference. The behavior of consumers are different. What seems to work in India may not work in other market. So the UX can be also as simple as become a challenge. And so it's hard to put our arms around the complexity of DPIs going overseas. Because some point in time, the DPI has to go overseas. For example, India to continue to its economic growth, they must find a way to connect DPIs to other DPIs. There's no way out. There's always a limit to how much you can grow domestic market.
Understood, thank you. Thinking of a more international flavor around central bank digital currencies, CBDCs, in terms of the impact on the future of money, cash, payments, and sort of use cases. Again, I'd be interested in your view from how this would impact financial institutions, from a regulatory perspective, what concerns or thoughts might you leave with us, either for domestic CBDCs or actually when using this for potential international transactions?
So I think the way to think about CBDC is to start in a very foundational thinking. There are 4 kinds of cash, money today. There's a cash, which you all know. And what is the equivalent in the world of digitization? It's called retail CBDC. And there's a wholesale money in the banking system that has become wholesale CBDC. And there's a deposit, commercial bank deposit, which is now called tokenized deposit in the tokenized world. And there is something called stablecoin, which is the reflection of M3, which is an instrument which is perceived as a money, but backed by some asset. Regulated stablecoin. I'm kind of dismissing the role of cryptos here. It's kind of bad idea. So if you take this whole definition of money in the new form between retail CBDC, wholesale CBDC, tokenized deposit, and regulated stablecoin, each comes with a particular purpose in the new financial system architecture. Unless you have a large market, retail CBDC has got no use case. Maybe you can argue that can be a money in the electronic world when there's an internet breakdown, possible. Offline payments using retail CBDC. The wholesale CBDC becomes interesting because if you are building tokenized asset, if the financial instruments are getting a tokenized form or non-financial asset getting tokenized form, they need money to run on the network. So what kind of money we need to have there? It could be a settlement money using wholesale CBDC. You need banks commercial deposit in tokenized form that can be injected to the network to settle asset, tokenized asset. Or you can use stablecoin, which to me, best use case is cross-border payment. It's quite efficient if you look deeply into stablecoin. So you got to look at CBDC and the architecture of the future of money, and then overlay with the assets on which is going to be used, the assets which are going to use this money. And then think about what Nandan talks about, the Finternet. Because that's the network where the asset is tokenized, money is tokenized, and the settlement is real time. And to do all the three, this is where a CBDC is required in a wholesale form to settle this asset between two different parties with different risk level. Remember, the money you take from your money you hold in one bank versus money you hold in other bank are not equal. While we train to believe singularity of money, they have different credit risk. But who protects the singularity money? It is the wholesale money of Reserve Bank of India. So I think you got to replicate that system in the tokenized world to make it work. And the use cases can be anything from financial assets in the most efficient form, from bonds, equities, and there's some new innovation where you don't need collateral to create more credit.
Do you see any nation getting closer to, I'm putting on the spot here a little bit, but any nation that you're talking to, that you're seeing, where you're thinking, actually, you're leading the pack here?
I think the number of, I don't know if it's a good thing or bad thing, the number of experiments going in the space is more than the actual production. I mean, production ratio of experiment is less than 1%. So the production leap of faith has not happened in any country. I mean, there are some examples you can take. There are some pilots, not at a scale we'd like to see. But I presume that within 2-3 years, major market G10 currencies will see a production-grade deployment of CBDC. We're almost there. We're almost there where we can make choices to issue those currencies. Having the right infrastructure is the key to that success. But you will see certain particular use case becoming production-grade, large-scale implementation. You can argue that today there are enough pilots to say that we are there. But I will be a little more cautious. There's a lot of work to be done.
Understood. I'm now going to pivot, really, if I think about the complexity of data, the velocity of new and alternative forms of data, and from a fintech or financial services provider, the capability to ingest and use that volume of real-time data to make decisions within their organizations. The buzz now is around quantum computing. So when we think about the opportunities that exist in terms of that volume of information and how we could tailor that, if we think about the fraudsters that also might be thinking about quantum computing, but I guess more from a progressive standpoint, if I'm a fintech or sit in the FS world, how could I be ready for this new technology? What should I be thinking about, and how could I use that to drive value? The quantum computing.
Well, you know, I would say upfront, there's no quantum machine in that production grade today available. It's a 5-year, 10-year from now. Does it mean we don't care? Of course we care. Why do we care? Because it's already known that the current encryption is not good enough in the world of quantum. It is by design going to break. And we know that fraudsters and scamsters have harvested all our IDs. It will question the fundamental design of our financial system. Forget even the digital system. If your ID and encryption get compromised, I mean, there's nothing left. It's a one-way disaster. There's no recovery. So the bad actors are already harvested all our passwords, and all they need to find computing power to break it. So do you have to wait for a machine to be ready for that? Answer is no. Already the standards have been published last month in July, which will allow you to quantum proof your encryptions, what you have today. So quantum ready, quantum, or the different way to frame it. Make it quantum proof. So there are enough work for us to start in this space to make our encryption standards quantum proof. There are enough work on the space of finding use case, very narrow use case, where you can do experimental simulated quantum-based modeling. Now, there are large tech companies are providing cloud-based quantum computing facilities, but they're kind of expensive. Somebody told me $50,000 per minute or something, I don't know, I may be wrong. It's quite expensive, but you can do those experiments. But I think the work we have with, as a regulator, as the financial sector stakeholder, we can look at our existing systems, processes, and ensure they're ready for a quantum challenge whenever it comes. But I find this space exciting. As a market innovator, we will indulge in this space. It's expensive, but worth trying.
But potentially a few years away from really seeing this grabbing traction for the end consumer, for fintechs, for FS.
Yes, man, I was in the quantum lab in Zurich. I was telling you, they're moving information on a photon, a single photon. It's just crazy. And they're running this infrastructure in a sub-zero temperature environment. It's completely sanitized. It is just bizarre. You can't run those machines in a physical, normal environment. So there is a long way to go, but it doesn't mean that we should not do anything about it.
Well, we'll look forward to hearing how that develops and certainly work alongside that next phase of innovation. After this question, we'll open up to the audience for any questions that we may have. But if I think about the role of fintechs in the future, so, you know, operating within the regulatory guidelines, where do you see the next chapter or the role of fintech within the financial services world? Where do you think they can have the most impact? And the pace and variety of technologies that sit within the fintech environment, how do we develop talent? How should we be thinking about talent within that environment to keep fueling that progression?
Well, I think and this is a message because I'm in India. I think somehow the fintech has a narrow definition in many countries. It's between payments and lending. I think we're going to get out of that and expand fintech to other asset class. I think there are some wealth advisory and all this are picking up, capital market infrastructure. So I think there's a need to expand the focus of fintech beyond payments, beyond lending. That's absolutely required. I think not enough has been done, especially large market. The second part of will be, I think we have a serious skills issue. I think we have underplayed, understated. If you look at the job market, there are a lot of people, but they're not skilled enough to be employed in this sector. And it's very important that we should disproportionately allocate capital resources to build the skills required. The number of tech jobs, tech demand coming up, and number of programmers, good programmers, have a huge mismatch. And there's a concentration risk on where the resources are getting created. So there are a whole sort of skills issue facing this thing. The third area would be, still I believe there has to be some sense of responsibility. And these things are matured. In the fintech ecosystem, the founders are matured, the entrepreneurs are matured, they're understanding regulation is important, we can't take it for granted. I think there's a need to step up the governance processes within the fintech sector to ensure that, I always try to simplify, when you look at a regulator, there are 6 things you should think. First one, regulators expect you to worry about know your customer. You cannot compromise, non-negotiable. Second non-negotiable is anti-money laundering and the terrorism financing. Third, consumer protection. Fourth, market integrity. Fifth, financial stability. Sixth, tech risk. If you take all the 6 tech stack, like a regulatory stack, and let the fintech think thoroughly through this process, a lot of regulatory governance processes should go away. Unfortunately, we don't think that way when you build this kind of solutioning. You've got to think in the 6 filter, everything you do on the space. Lastly, I think this is the elephant in the room, is the data piece. Ultimately, we need data, and data is where the innovation is coming. Data governance, data privacy, misuse of data, consumer, there's a whole set of issues to be dealt with. And that becomes more complex when it goes cross-border. So I would argue that we've got to focus on data side a bit. And maybe the last more point is that I think efforts should be made between regulators around the world to build some kind of cross-border interoperability in this space. There's a need for fintechs to cross-pollinate across the nation. And still today, large success of fintech is where the domestic market, where they started from. Very little success has happened beyond the borders. So we've got to fix that problem. I keep on saying last, still I want to end saying that there's a whole new opportunity fintechs have to take up, is the sustainability side. I call it green fintech, because by 2050, banks have to reallocate all their assets and make it compatible to the expectation of the sustainable goals. So there's a green finance, sustainable finance. There are a lot of techs required to do green disclosures. Nothing has been done in this space. Good opportunity for fintech to get into that space.
Very interesting, and thank you for those comments. Cross-border is a huge demand today, and green finance clearly is already a fixed agenda point. So let me, with a couple of minutes, just open up to the audience to see if we've got any questions that we can try and answer for you.
This is just following on to the arc about quantum computing. So I think Singapore has published standards for quantum proof encryption. So the question I have is, when is this going to become mandatory? Because right now the risk is store now, decrypt later. Yep. And the quantum computers are already here right now. They're just going to be exposed.
Well, your question is when the standards will be published?
I'm saying, when will they be made mandatory?
From a regulatory standpoint in Singapore, we have issued some kind of guidelines to do an internal inventory assessment of where we are in the banks. So I think at this point, we got to do an inventory assessment. B, we got to figure out what is the right infrastructure we must have to test this new standard. So a lot of homework has to be done. I think it's too early to mandate because it's expensive still. We still don't know what are the coverage of where to focus on. It will still be an experimental stage. But the critical part to your question is a great question that banks have something to do. And to me, three things. Inventory, get ready with the necessary area where they're going to invest. And third, prepare a risk assessment. And once that is done, I think mandates will follow.
Thank you. And I think we've got time for another question.
Yeah, hi. This is Piyush. Great insight. As we are thinking forward to connect multiple DPI across the different countries, it comes with the risk of fraud, right? As we are evolving, the fraudsters also evolving, right? Even today, when we talk about DPI, we see a lot of frauds happening around. And with the cross-border boundaries, it will be much more difficult. So what is our thought process about how do we create an ecosystem to monitor and make sure that this DPI has secure and great customer experiences?
Thank you. Very good question. In fact, when India-Singapore connected the Pay Now UPI, I think one of the difficult area for us to sort out was the cross-border dispute resolution. So it's one thing, fraud is going to happen. I think you can't avoid it. It's going to happen. But once it happens, how do you deal with it? And dispute resolution becomes very complicated when it's cross-border because there are different rules, regulations, way to handle dispute. So that's one thing we have started in some sense. It's still a long way to go. Second thing I think there is some way to learn from the card company, the way they have managed dispute fraud when they're moving money on the credit card network. I think we can take some learning from card companies and try to put it on a P2P transfer infrastructure. Third, I think still the challenge in especially account-to-account transfer is that almost, I would say safely, 95% of the fraud scam has to do with the consumer behavior and consumers' own understanding of how they should deal with a possible fraud attack or a scam attack. So a huge space for us to build a consumer education literacy around when we deploy cross-border products. So if we can get these three things right, we can deal with it. But I don't think there'll be a point, there'll be zero. I was walking down the exhibition, it says zero fraud. It's a bit of a altruistic, there's nothing called zero fraud. Fraud will happen, but we've got to still have to deal with it and find, as you rightly said, consumer protection, dispute resolution, education, and of course, good technology.
And lastly, right, as you said, consumer behavior. As we are now connecting more and more DPIs, we also need to have a big data analytics where we understand how consumers are behaving across the borders, how we can increase the ties. And this can be, immense opportunity for learn about each other across the borders.
Yes, agree.
So can we create an open ecosystem to share the data and create a big data lake, which, companies and people can leverage to improve their supply chain, reduce the cost of production and storage and leakages and pilferages. All this can be helping us to create more sustainable economic environment.
I think somebody should record his last line and publish it. That's the solution.
There we go. I'm afraid we're over on time now. So, Mr. Mohanty, thank you so much. It's been a pleasure to spend time with you this afternoon. He'll be around, as will I, for the next 2 days, and we certainly look forward to seeing some of you over the next couple of days. So thank you very much.
Thank you very much.